Let me just double check. Good morning, everybody. Good morning. Hope you all had a wonderful weekend. Mine was cracking, mainly ankles, but is what it is. So currently, guys, I just want to let you know the reason why I actually broke my ankle this weekend was so that you guys get some good luck. Because as you know, as the saying goes, break your leg. Which actually, funnily enough, just for anybody that likes a little bit of fun facts, is the saying, from my knowledge, the saying, break your leg, is known to be a saying to say good luck, basically, doesn't it? And where that actually originates from is theatre and plays, because they say if you break your leg, you're in the cast. And I thought that's a very, very clever way of doing it, right? Of talking about it. So yeah, a bit of a fun fact for everybody there. But let's dive into the charts. Got me crutch, guys. I'm ready. So yeah, I had a wonderful night. Unexpected watching Take That tribute night, and then me and my princess decided to do some cartwheels and handstands, and it didn't end that well for one of us. No guesses to who that was. But anyway, fortunately, I'm very, very grateful to be in a position whereby I can work from anywhere at any time, which, doesn't happen by accident, but it does mean that, someone pointed out to me, says you could be out for 6 weeks, maybe even longer, depending on the recovery time. Well, imagine I was, physical labor or outside doing work and on sick pay or whatever. And, situations like that makes me very, very grateful. But anyway, let's dive into what we're looking at. So this was called out in, obviously, guys, just to let you know, it's bank holiday today, US and Canada, which means to stay away from the charts wouldn't be a bad thing. The price is going to be chopper, going to be sideways, a lot of sideways movement, especially after what happened on Friday and over the weekend. Unfortunately, Israel are in a war, and I'll explain why that's going to impact the markets very, very brief. Well, in a moment. But in regards to actual days, it's Monday, which price is usually choppy, sideways. Occasionally you'll get a random push, but most of the time Mondays are sort of like people are watching, observing, seeing what the market's going to do for the week. Also, like I said, it's bank holiday in Canada and America, which means even less liquidity in the markets. Liquidity means money. So yeah, just to have a day off, extend your weekend wouldn't be a bad thing. But if you are looking to trade, of course, the team, the guys in the premium group and my free signal group will be getting some trades. The premium group already have. We are in this trade that you can see here. So at 8:40, I posted a sell with a tight stop loss. Okay, it works out to about 19, 20 pips stop loss, right? Worth it. And I'll explain why in a moment. But as you can see here, just to make sure you got my screen on. Yeah. As you can see here, price did move within moments, and it went to looking at that 34 pips in profit. Now, I've told the team not only to move stop loss to break even, but to also take half of your lot and close half the trade, right? So at the minute, it's completely risk-free. Now, what do I mean by taking half? Okay, let me do some numbers here for you. So let's say, for example, just to keep the numbers even, because the lot size is completely up to you, but just to keep it simple, let's say you entered when I gave the trade here at this area, yeah? You entered a lot size of 1. Okay? Now, as the markets move down, that lot size of 1 would equate to on this occasion £3,400 or £340 or £34. Just depends on the lot size you use. Yeah. Now, When I say close half, it means you go into your account, okay, on the trade. Let's say you're using MetaTrader like I do, and most people. I would then tell you to close half your trade. So you click on the trade, you click modify, and you change the number. You click on the trade, you click modify, you change the number at the top to 0.5, and then you close half of the trade. Okay, so let's say, for example, it's at 340 pound here. You would close 170, and then leave the rest running. Now, as you can see here, just in case you can't, as you can see here, let me just move this a bit. 1 second, make it a bit clearer for you guys. Okay, hopefully that's a bit clearer. All right. As you can see here, when I gave the trade, it moved nicely down into 34 pips, right? Then it's come back up, almost taken us out, right? And because we took half, it means 170 up, and then the remaining 170 would be here, okay? And then it would go back to zero. So it would close, but you'd still have made some profit, which is why it's very important to not, for a lot of beginner traders and a lot of newbies and even experienced ones, they'll leave a trade running the whole way. Like it would go to plus 340 here, for example, and then back down to zero. And they've just spent the last, well, what's that, 3 hours, and now it's at zero, and that can be quite frustrating. So what I advise is that when it gets to a certain amount, and you choose that amount, okay, I say 20 pips, 30 pips, and 50 pips, definitely, okay, because especially with gold. So say you go into 20 pips profit, which would be here. You can close a little bit if you like, then 30 pips, close a little bit more. And then when it comes back, or if it comes back, you've made profit, right? But if it continues down, then you're still in the trade, right? Now, a lot of people will get in and then they'll just close here and then maybe get back in here. It's completely down to you, the way that you want to trade. I just recommend that you take some profits for the work and the effort that you put in. But phone's pinging, so that could mean that you can't hear what I'm saying. Okay. No, that's fine. So anyway, let's go back onto the overall analysis of what we're looking at. Again, I won't give too much information on here because it's not fair on the people that have paid to get into the group. But the analysis overall is that, just to let you know, that these moves here were based on the results of the fact that it was NFP on Friday. Friday's usually a day of big movements anyway, in the opposite direction. As you can see throughout the week, it had been going down, and then using NFP to boost it, and to completely correct the whole week. You see that, where it started here on, let's say here Monday, is where it finished here on Friday. Okay, see, it's just completely corrected itself. So all that movement you could have grabbed on the way down, which we did. A lot of us were making some good money in the sells, and then it completely corrected itself back up with a buy opportunity on Friday. Also, to follow up with that, let me just move this. Yeah. Also, to follow up with that, of course, we've had the news released. There's been talks about it for quite some time, but it's been officially sort of released that there is a war in Israel right now, which is obviously, very unfortunate for those being affected by it. But we're here to look at the charts, and what happens on the charts is when there is fear pumped into the media, meaning they'll release huge news of lockdowns and wars and economic crashes and stuff like that. Whenever they release fear into the media, people buy the safe haven assets, which is usually the metals, gold, for example. So as you can see here, for anybody, just to make sure you can see, at 11 o'clock when the markets opened back up again, because bear in mind they're not open between 10 p.m. on Friday and 11 on Sunday. That's gold, right? Others are slightly different, but in terms of gold. So once the news, I believe, was officially released on Saturday, if I remember right. So the markets wouldn't have moved throughout Saturday. But of course, when they opened again on Sunday, you can see here, bang, a huge shoot up, panic. People buy gold straight away. And that's a big move in the space of, let's even say 30 minutes, 240 pips. Okay. Now that we've broken, so now that that's happened, and we don't know how long the war's going to go on for, and now there's obviously panic being pumped in, and we've also broken structure. You know, we're going to be looking at buys. However, the way that I like to trade is that there's potential all the time. Okay, when you look wherever you're looking, right? So that's why I've given a sell this morning. Reason why is because overall, when the US session opens this afternoon at around about 1 p.m., it will be quieter than usual, I expect, because, like I said, it's the bank holiday. However, guys, if it reaches this zone here, we are going to be looking for some buys and to continue it up, because where this could go now is, well, it could end up, depending on how long this goes on, because we also bear in mind, guys, there is a recession coming. I'm not here to pump more fear into everybody, but it's so obvious. Like things are, there's things like the treasury yield bonds and stuff. If you know about this stuff, they've reached the highest that they've reached in years, right? And last time that happened, I mean, look at this. If I just move on to this screen, this is the US government bonds 10-year yield. Okay, look at that. It's currently at 4.8188%, which this is a daily chart, by the way, guys. So all these candles represent one day. If I put it onto a weekly, look at that. It's just rising, rising, rising. Okay, the highest it's ever been, according to these, is right up here at, what's that? About 16%. And you know what's happening, but the signs are there. You know, look at that. Since July, just non-stop growth. We had a little bit of a pullback, but now it's rising and rising more. The bonds, when this does, it just means just so much overloading of money in the wrong places, and rates growing and madness just happening. And when that does happen, there tends to be a crash. Okay, so you don't know when it's coming. I mean, potentially could be coming November the 1st, or around about November the 1st, purely because that's when last weekend the US government was due to be shut down, because they didn't actually basically the assessment that they have, they failed pretty much. They say they didn't, but it's pretty obvious if you read between the lines that they did. But Joe Biden allowed them to have a 45-day extension, which I believe takes them to around beginning to middle of November. So that's when this could all happen. And then, of course, now we have the war. So, yeah, it's not looking good. So the reason why that's important is because a lot of traders, they like to use the technical analysis. They look at the charts, the candle patterns, the formations, and they'll work from there. But the news and the fundamentals have a huge impact, because fundamental is the news, which is obviously you can look at all the news upcoming on Forex Factory or Daily FX or My FX book, depends where you want to look. Okay. Fundamentals affect sentimentals, which is what other traders and other people are doing. And then the sentimentals, then of course, you see what all that's happening is, what's happening with that on the chart for the technical. So that's three different types of analysis for you guys: technical, fundamental, and sentimental. It's good to know all three. Some people just work from one. I like to do all three, purely because it just gives you a bit more confidence in what you're looking at. So yeah, guys, let's go over a couple of trades. It's what you were here for. So we have this gold. I mean, these are colours and things that I've chose just to lighten up my life. Apologies if I'm a bit discombobulated at the minute, if that's the right word. Obviously, I'm in a bit of pain with my foot, and which means I'm not sleeping the best either. But it is what it is. We're still making some good money. So the team took a sell this morning, like I just mentioned, at 8.40, which then moved 30 pips into profit there to there. Okay, took half off here, so it's come and then it come back up, not quite all the way back up, as you can see from here to here. It came 5%, which again is the area that I love to look at the fib. So the stop loss is currently here. If it takes us out, then it takes us out, but that's a nice sell that we had. And expecting it to come down here, take out this liquidity that I've marked out here. Liquidity, you can see, is based on the spikes. I can even do that one there. There you go. Spike, spike, spike. Yeah, you see that? Just point it out a little bit more in case you didn't. These spikes, yeah? Basically telling me that buyers have came in there, right? Left. Some sellers of, obviously, whenever there's buyers, there's sellers. Some sellers have come in and now they've left money there, okay? Which means I'm expecting it to come down here. Expecting it to come down here, take out all this area here, and then we can catch a buy up here, okay? Okay, and then obviously we're going to look to target the next area, which is the best area, which would be this one here, because there's been a lot of movement there, right? Again, it could go all the way to here. There is no limit to where this could actually go. It's all dependent on how much fear is going to get pumped into the media, how the market responds to what's going on in the world. And we have had such a huge push down of gold over the last month that it's due a massive correction. So, guys, just to, again, I'm not in control of the market, but just be careful if you are putting on sells. Like, I see a lot of people in these chat rooms and stuff still putting sells on, which, it's fine. The market has, what goes up must come down. The market does have to do that. But if you are going against what's looking to be the trend now, and the reason why it's the trend is because of this breakout of breaker structure here. Call that a chock now because it's the first breaker structure. We've not had one yet, but if it breaks this area here, it's going to continue up, no doubt. Okay. Let's move on to the next one. This trade was given on Friday, which I'm buzzing about because this was an awesome trade. So I'll pop this into the premium Telegram group. Okay. So first of all, it was in a key time, which is obviously New York session, 2 p.m., which is the first time that I actually got in, and then I told the team that you might have missed your move, but just to wait for a little bit, and then you'll get a re-entry. Let me go over why this was. Okay. So first of all, on the 4 hour, that looks even better like that, doesn't it? So first of all, on the 4 hour, let me just clean this chart up a little bit. Apologies. Yeah. Okay. So on the 4 hour, I've drawn plenty of these lines. Just ignore them for now. I'll take them off. Yeah. So on the 4 hour, you can see we're clearly going down. That's been a lot of dumping on both gold and the NAS and US 30 over the last few weeks for sure. But eventually when the markets do want to make their move and do want to turn around, they are going to do it quite aggressively. And, most of the time, all the time, they're going to find an area in which to do it from. So what better time to turn it all around than with NFP? NFP on Friday. Here you go. Non-farm employment, unemployment rates, average hourly and unemployment rate in Canada, and employment change as well. And of course, all the other news, and President Biden was speaking on that day as well. So yeah, a lot of the time markets will use NFP to change the direction because they can use the fact that it's high impact, high volatility to do a huge pump. And that's exactly what they did. Okay, so what we're looking at is on the 4-hour chart. Just ignore the lines above for now. Okay, 4-hour chart, we're coming down, right? I've marked out this area. So from Wednesday, it rejected this. Okay, if you look here on the 4-hour, it's rejected. So I've drawn this line based on that to just give me an idea, based on the fact of it's done that previously. Okay, in this area here, look. Obviously, it's not going to touch it to the T. Nobody can get it on the T. So you draw an area, okay? Don't ever think that you can just get it on the actual pip, right? Otherwise, you're just going to, if you try and be a perfectionist on the markets, it's just going to not end. It's not going to end well. You do an area, okay? So in this area here, it's rejected this area and then moved up quite aggressively before. So what I've done is I've noticed, okay, on Wednesday, it did that as well. So this is going to be a key area. Let's see what happens in the future, right? And that's what all these lines are up here for as well, just to show me. There's probably too many here, to be fair, at the minute. So I'm just going to have a clean up of this after this stream. But I noticed the rejection. So I drew the line, drew the area, and then we waited to see what happened. And if we go down to the lower time frame now, because that's 4 hours, you can see here at 1:30. If I look here, look, 1:30 was the news, drove the markets down, right? Everybody's getting in sells now. Not everybody. Obviously, there's a lot of traders now getting in sells on this, okay? And it's trapping everybody. But I know that at 2 o'clock, the markets at the New York Stock Exchange opens 2 and 2:30, right? Are very important times. So it's drove it into this area. It's rejected it. And I entered at 1:30, and I told the team in the premium group as well. I says, I've just entered a buy. If you want to get in now. And then when I updated them a little bit later on, when we were 20 pips in profit here, let me just show you. Got in here. Okay. Rejection down. I actually got in on this at the bottom of this rejection. And then, yeah, that's what happened. Let's just go into it here. Okay, this rejection here at 1:30. We then went 20 pips into, well, way more than that. But at about 20 pips in profit, I said to the team, I'm in, but just wait. Wait till 2:30 or 3 o'clock. Okay, so we're at this area here, and then obviously later on at 3 o'clock, it's come back into this area. It's rejected, and obviously I've put I placed enter, which was a much better time to get in, which is perfectly fine. So we've caught this initial bit, caught some more here, and then everybody, whoever got in entered with us with a stop loss, of course, below these rejections. And as you can see, a beautiful clean break, like my ankle. Brilliant. Beautiful clean push right up and to the TP. So yeah, going over what I've seen is, like I just mentioned, on the 4-hour, because often, especially with things like US 30, previous areas are very, very important because these are called bank zones, okay? Basically, where the big moves happened previously, as you can see here, big move up. This means this is a bank zone. This is an area where the banks come in and buy, okay? And just like up here, you can point out, see these lines I've drew. where the banks sell, right? So it just gives you a better idea of what you're going to sort of anticipate, and not only that, where you can place your targets. So if you see here, the green area at the top of the green area is where I place my TP, where I'm going to get out of the trade. Why? Because this area here is where big sellers come in, right? Now they didn't come in this time round, but it doesn't matter. That's a huge move up, and that's a great place to put a target. Okay, so always when you are entering trades, especially US 30 and NAS, you want to keep the stop loss as tight as possible because it moves quick. Also to put the stop loss under the rejection area because you need a little bit of breathing space, but you do also need to make sure you're out if it goes against you. This is what I call would pretty much be a perfect entry for US there. Okay. Big push down into the area, into the bank zone of previous, and obviously the one before. Stop loss here, which is underneath this because it's been here before, and just let it ride up to the next place where the target is, guys. Now, to point this out, to analyze this like this, and to talk about entering and stuff like that, if you're a trader, looks pretty easy, right? Oh, you just click this button, you put stop loss. It's not, right? There's emotions in it. It's like, if I just walk through it, guys, so I can back test this for you. I'll show you. So I'll show you the sort of emotions you can go through. So it's come into this area, right? It's shown now a rejection, right? As soon as it's coming into this sort of area around here, you can go onto the 1 minute, okay? And then we would just go through the process. There, rejection, push up, okay? Good area, good time to get in. And as you can see, these spikes, they're good. That's a good amount of money, right? Now you can look at closing, or you can just, like say, keep what I've said, the stop loss as it is. You could look to close because obviously at this minute we're just playing off the rejection of a strong move. Okay. Oh, I've clicked the wrong button there. Going off the rejection of a strong move. And then obviously we're looking to come back into this area. Now, obviously, at 130 isn't the best time to get in for US 30, right? If you're an experienced trader, you can because you can get in and get out, but 2 and 2:30 are the best times for US 30. It's just when the market moves, when the New York Stock Exchange opens, and when the most money comes in. So as you can see here, if you waited to 2 p.m., now you've got your rejection down here. Just there it is. And now you see what happens. There you go. Start to see it start to pump in. Comes back down, believe around, 245. And then 3 o'clock. See how it's working? It's not going below the stop loss the whole time, below the rejection. Give yourself some breathing room because some people put it right there, and spreads could take you out. So you be careful. And then as you can see, can you guys see that it's not just like a lot of people think because I put a buy on and it going up and up and up and up and up, that's what it's going to keep doing. But that's not how it works. It's like stairs. You see that it comes up, drop, 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 because sellers are coming in. You got to think about this. Like, not only when a buyer comes in these areas, does he also get to a point where there's been previous drops? Should I say that? See there? So a seller comes in here because loads of sellers come in this time and drove the market back down. So maybe they took their money, they were happy with what they had, and they're gone. So a seller comes in, and then same again. Sellers come in here because there was rejection here, so they may think it might happen again. And then if we go up again, big sell down. So we've seen some sellers come in and drive it down. It's all down to all other individuals. It'll get to a certain level and they'll be happy. Imagine you've got it in here and you've taken 230 pips from US 30. You sell off. You're happy with that, right? Some people's target would have been the previous rejection, so they've got in and they've got out. It's all down to you as an individual, not only what your lot size is, but where your target is and what you're happy with. The important thing is you just got to stick to that target. And if you're aiming for big moves, big targets, then you need to understand that from an emotional point of view and level, that you're not going to get that. It's very unlikely you're going to get that within a few minutes. So you're going to have to put yourself in a position where you're going to look in over the course of a few hours, maybe even a couple of days, right? But if you look here, the reason why this was such a good move was because not only, like I said, it's Friday, which the markets will move quite aggressively on a Friday, but it was NFP. Not only that, but also it was the New York Stock Exchange, the most liquidity, the most movements during the US session between 1 p.m. and 9 p.m., but definitely after 2 p.m. Right. So if you are looking to trade and to get in and out in a couple of hours or an hour, the best time to trade is between 2 and 4 p.m. Okay, UK time. And as you can see, it went to the target level, and it's continuing. And this gap here, just to go over everything, this gap here was the market opening on Sunday. If you look here, at the bottom it says Sunday at 11 p.m., which is when the market's open for us, yeah, UK time. And it closes, of course, 10 o'clock on Friday. So this gap here needs to be filled. And this is the movement we've had so far. Coming up, we'll take this all the way up to now, which is 11:15. And that's where we're at right now. And as you can see, just move this. The gap is getting filled, guys. So I'm not turning around and telling you to get in a buy right now, by the way. Although, I am. Closed that off and I got in a buy here, I believe. Reason why is because it's not in the main trading session for US 30, but the markets do have to move. So keep a tight stop loss. Best option would have got in here, but I wasn't looking at the charts. I think I was still asleep. Not been sleeping very well, so I'm in and out of sleep at the minute. Obviously because of the ankle, you turn a little bit and anyway, so we'll be anticipating it to continue up here, and let me just look. Yeah. Where was it? 3318. Yeah, almost spot on. 33188. There you go. That's when I got in. After this indecision candle and a big push up there. Yeah, just looking at the phone now. Yeah, and then we're going to look to, on these pullbacks, you can feel free to get out and then, wait till later. Again, now up until 1 o'clock, it's best time just to step away from the charts, really. So anyway, so going on to gold, guys, you could see huge movements up depending on the war and everything else that's going on in the world. But also just to let you know that according to data on the actual charts with the US Treasury yield bonds, 2-year and 10-year. Look, if you look at 10-year, it's nice big push up, a bit of a retracement, but it does look like it's continuing up. So in regards to that, that's going to make the USD on the charts, not against gold, but against other currencies, strong. Okay, let me explain. So obviously, gold's different. Gold is a metal, precious metal, so they'll buy in times of panic. But with regards to it against like GBP USD, for example, it's currency versus currency. So it looks on the charts. I know, and anybody else who's been following the news and the economy news and stuff like that knows that there is a big crash coming. Like it is definitely coming. It's just a matter of when. So in the meantime, it's like ride it down with it. If you look here, GBP USD, that's the pound versus the dollar. As you can see here, look, it's just down, down, down. Obviously, NFP again pushing it back up. But overall, down, down, down. Okay, so whilst the bonds are going up, whilst the Dixie, which is obviously the dollar index, while that's going up, that shows on the charts strength in the dollar, which means to trade against it would be not the smartest decision, right? Other than gold. So for anybody that's asked me the question before, what do I think? Because GBP USD is dropping, Euro USD is dropping, as you can see here, it's going down. Do you think gold's going to drop as well? Well, gold's in a consolidation, right? And again, that's why I say it doesn't. You don't go gold. You don't say USD is dropping in one area, so that means gold's going to drop. They're completely different. Okay. Yes, obviously it's against the dollar, but you keep them separate. Honestly, mentally, if you're trading more than one currency, keep it separate, guys. But anyway, that's just sort of my analysis I wanted to give you guys. It's been a little while since I've been on here. So set on a separate basis, the AI and the software that is passing the funded challenges is completely separate to my analysis. That does exactly what it says on the tin. It's getting some wonderful results, seeing different certificates coming through and people's accounts growing left, right, and center. And it's wonderful to see that. So what I'm coming on here is to merely try and help educate you guys and teach you a bit about the charts. The reason why is because obviously it's fun, but also it's in times of panic and economic disasters and stuff and lockdowns, which I'm pretty sure another one's coming pretty soon. You may need to stay at home again. And if that's the case, then, and for example, on the crutches, in this instance, if I was, like I said to you earlier, if my job or income was dependent on me walking, running, being outside, heavy lifting and stuff like that, and I'd be on sick pay and wouldn't be able to make ends meet really, if that was the case because of what happened. So again, very, very grateful, but I have designed my life into such a way that allows me to do that, and you guys can do that as well. But it does take time. Okay, doesn't take time for you to purchase these accounts and have the software and everything do it for you, and then have a recurring income every month continuously. That just takes an upfront payment, but it does take time to learn and master your emotions on these charts, if that's something that you want to do, guys. So that should be enough. But all in all, guys, expect a choppy, not much movement for gold today. I mean, it's Monday. It has been known to do it a few times, but again, we got in a sell up here, nicely done. Anticipating it to come here before we're looking for buys. But other than that, you guys have a fantastic day, and I'll see you on the other side. Hey, if you want to join the premium group, drop me a message. I'll send you the link and everything that you need. If you want to join the free signal group, drop me again. The link's in my bio. Guys want to start getting into stuff like this. It's the future. Forex and stuff has been around long before we were alive, and it will be around long after we're gone. And it's a life-changing machine. Anyway, have a fantastic day, guys.